I want to believe my audio is quite okay now. Let me check that. That I man, it's really annoying that my previous live audio was terrible. I didn't know, man. I didn't know. So I have to go over everything, but I won't waste as much time as I did in the previous live. But like, what's the purpose of making a video if you guys can't understand what I'm trying to pass across? So I'm believing that this is quite audible. Let me just confirm real quick, so I'll get into the explanation as fast as possible. Okay, great. Okay, great. That has been confirmed. The audio is working. The audio is working. So everything I said in the previous live, I'm going to just break them down right here. I'll break them down right here. So, like I said, this is a 10K account I'm currently trading. I bought this account. You can see the date right here, August 17th. I bought this excuse me, I bought this August 17th, and currently today is 27th of August. So account is currently in an equity of this, and the balance is this. Why the equity is more than the current balance is because I'm currently in a trade, which I'm going to break down in a few minutes. Realized gain accounts currently up. You can see the win rate 54%. I don't know why Maven doesn't have more than 1 week equity. Like the highest equity you can see is just for 1 week, right? Best trade 202.08, worst trade 89.40, average win, average loss, pretty much everything 13 trades. So trade factor 1.89, which is positive. That's a positive expectancy. So I'm currently making, for every dollar I lose, I make 1.8 back, which is positive. You can see the whole performance right here. These are the trades I've taken. On the calendar, it's pretty much it. So we had 2 trades on 19th, 2 trades on 20th, and then 1 trade on 21. But notice how, see, trading is not linear, right? Last week I made 545.63, and this week I'm down negative of 191. However, pay attention to this. 2 trades, 1 trade. Total of 5 trades taken last week. 2 trades, 1 trade, 2 trades. I took a total of 5 trades. That gave me this. And now a total of 5 trades this week. Losses gave me this plus this win. So basically, I've had about a total of, this is 5 and 7. I've had a total of 7 winning trades and 5 losing trades. But you see the difference. The difference is so vast, right? The difference is so vast. You can see that I have 545.63 in profit, and then despite the number of losses, it's just 191.55. That's the power of having a good risk to reward ratio, having a positive risk to reward ratio. So it kind of like sets me, you don't have to win every single trade. I mean, we all want to win every single trade, but like, you can't win every single trade, right? So that way you are able to make more than you lose over a long period of time. You end up making more than you lose. That's the whole point of it. So now I'm going to jump into the breakdown of the chart, and then we're going to see, because the previous live stream was longer, right? But like, unfortunately the mic wasn't working. So now that has been fixed, let's get into it. So why I'm showing this is just for transparency, right? So I take losses too. Don't let anybody tell you they don't take losses. Losses is normal, but like, as long as your wins are way more than your loss, eventually you are on the positive, right? This is I was expected to pass this account this week, but unfortunately market conditions this week is not looking that good. But I'll still update you guys how this goes. Maybe not, right? So let's hop into the live chat and see the trade I'm currently taking right now. So let's switch that back to trading view, and boom, we are on gold right now. All right, cool. So this is what gold is right now. All right, Yeah, all clear, all set. So this trade right here. Okay, so I'm going to be explaining the ideology behind this trade, why I took this trade, why I entered, why my take profit is where it is, and why my stop loss is where it is. On the previous stream, the one that wasn't audible here, I said I took an L on this. This was a last sell before a buy, right? That created an area of demand right here. Let me zoom this in. Okay, so we had this high, right? And then we had this low, and then we had this high that took out this high, right? So we came all the way down like this, came back like this, took out this high again, right? We left this demand. So I was looking forward to taking a buy from this demand right here. So as you can see, we came down like this by taking out this low, pushed up back, and then bang, we broke through this demand. Like I really thought price gonna like hold to push it back, but instead we closed with a full body closure, right? We broke this whole demand with a full candle body closure. So upon seeing that, I took a sell right here at this demand now turned into supply. Those of you that trade SMC as ICT call it breaker blocks, right? So basically stop loss above and then targeted the new demand area unmitigated right here. So this was the sell I took, right? My stop loss was somewhere around here. As you can see, the demand zone I was targeting is this, right? We can see right here there is no price hasn't come back to this demand yet. So I was like, okay, I could buy from here, so let me sell. Since this one failed to hold, let me sell. And we pretty much went down, but we had rejection, and then boom, I got my stop loss hit on this trade right here. I got my stop loss hit on this trade. So that's pretty much it. Now let's clear this off. So that was the trade before this one you're seeing right here. Great. Now hold on. All right, cool. So now if we look at this purely market structure, right? We had this low, we had this high, we had this low that took out this low, right? So we changed character, we shifted structure from the uptrend we were to the downtrend, right? We had this high and we had this low that broke structure, and then bang, boom, we had this high, right? And then we had this. I should have taken out this low. If we took out this low, that would have been a break of structure to the downward side, meaning that we are still respecting structure to the downward side, which I could have taken that buy from that demand zone right there, and my sell could have been valid to like keep trading. Unfortunately, we didn't close with a body, we just swept the liquidity. As you can see this down here, we just wicked it. That's why you don't count this kind of things as break of structure. It's just a wick, so we just wicked it. After we wicked it, we had a sharp turn back to the upward side and took out this high, right? So we took out this high right here. Now before that, let me go back again. It's not easy explaining something twice. I already explained all this in my previous stream, but like I have to just go over it again so that you guys understand. So we took out this low, right? Took out this, and then bang. Let me stop here like this first. Understand this. The last buy before the sell right here, this was a supply zone. Just understand that this was a supply zone. Alright, this was a supply zone. Let me make it white. But guess what? Price came back to fill it. So we filled this again to continue trading lower, right? So that's why I'm disregarding this, because this has already been filled. Unlike this demand right here, you can see price hasn't come back to fill it at all. This, in the process of it trading lower, price has already filled it. Okay, price filled that supply zone, right? Great. So now came down, right? Broke structure again, making this another new area of supply. As you can see, that's why I marked it. This is another new area of supply. So we broke it. Notice how after we broke it, price came back like this to fill that supply zone, respected it, and continued trading lower. You see that, right? So we could have closed with, if we close with a full body, then we'll just continue trading lower. So if that had happened, yeah, if that has happened, this will become another new, this will have been filled, and then maybe the last buy before the sell, this will have become another new area of supply. You get it? So that's how we keep forming new zones, new zones, new zones, new zones, like that. But unfortunately, that didn't happen, right? That didn't happen. We had this low, price went back to fill that supply zone and then came down. Didn't break this low, we just swept liquidity, pulled back. Now you want to always understand that whenever price is coming back to a particular zone for the second time, except that zone is extremely strong, it's most likely going to break past it at that point. So we had this, boom, we took out this high like this, and then we broke out of this whole zone, completely invalidating the supply zone because it has been respected the former time. Why would they respect it again the second time? So upon seeing that, I now understand that okay, this supply zone is no longer going to hold because price has broke past it, meaning that the supply has now turned into what? The supply has now turned into a demand zone. So you can enter your trade, right here at this on top of this, and target the next, the next supply zone up. And now, why is my take profit there? I'm still going to explain the technique behind my entry and my stop loss placement, but let me explain the take profit target. So if you look at it, if we go back right here, let me check the chat if some people are like sending me messages. Okay, there's no one in the chat. Okay. So I'm reading you guys' comments. So if there's anyone that wants to ask any question, please feel free to ask questions. I'm looking at the chat at the same time I'm making my breakdowns. So now if we look at this right here, this was a supply zone up, a very strong one. Look at it, I marked it out here. This was a very strong supply zone. You can see how when price like just barely tapped into it, there was a strong rejection, right? Instantly. I'm not going to be doing all these higher highs, higher lows. I just want to explain something. Now we went back again, we tried the second time, strong rejection back. And if you look at it here, we never tapped that zone. I was actually on a buy. I took a buy on this trade, targeting this place as my take profit. It was so painful that price didn't get. If it had gotten to this point, I'll have passed this phase one challenge, right? But price didn't get to that point before it reversed and just stopped me. I was so pissed. I mean, I know you don't get attached to your trade, but like, come on, like, what remained at this point? Like, look at how close it was. How many, few pips, very few pips to this zone again, and price just came crashing down, right? So ever since, we haven't gone back to that zone, and I understand that all these zones right here have been used because as we were going down, price was filling it, just like I explained at this point. So all these whole zones has been filled. What do I mean? Right, if we have this right here like this, look at this is a supply zone, right? Take a look at it, price has already filled this. If you look at this one also, this is a supply zone. All these small baby supply zones, price has filled them. So there is literally no, all these zones right here, even this one, right, the last buy before the sell, price has either filled or broken through it. So there is, all these zones are just pretty much, there is nothing to hold right there. Most likely, if there is strong buyers in the market, we're going to break past them. However, I understand that the most significant zone, right, the most significant zone that is going to give us any issue is this one right here. This one is the main zone that I should be careful about. Why? Because look at it right here, price came, respected it, dropped, came again, respected it, dropped, and we haven't even traded into 50% of the zone, and price is breaking through. So most likely when price gets back to that point again, we are going to have a rejection, hence why my take profit is at point. So now let's go back to my entry, how I entered and how I placed my stop loss, right? So after price broke through this high, I normally use price alert. So I normally use price alert. I use price alert a lot, so I don't have to check my chart every single time. When price broke through this, I just came to the 1 minute time frame. As at the time, right, the trade is still currently running. Came to the 1 minute time frame. Let me squeeze this right here. Okay. So I came here, right? You can see this full body candle closure, right? We have this full body candle closure. I set my entry exactly at the end of the zone. Tap me in. Now, where is my stop loss? I want you to understand something. Can I hide this? You know, is there a way to hide this? Okay, let me just delete it. I'll put it back. Now, you can see this was the zone, right? So if you want to look at it, I put my stop loss at the swing low below that zone. Here is it. We tapped into this from this low, right? We tapped into this zone. We respected it on the lower time frame. We tapped into this zone. We respected it. We tapped into this zone. Respected it, right? So now this is the most recent low, correct? Yes, that's correct. Then we took out the high like this, came down and broke past it. At this point now we broke past this whole zone. So with the full body candle closure. So it's only ideal that price comes back into this zone. Now this supply zone has now been flipped into a demand zone, which ICT traders call it breaker blocks or SMC, breaker blocks or whatever term. At the end of the day, we're all trading market structure. And now it is only ideal that price then uses this zone, fill the buy orders right here to then continue trading higher. Now you can see this is the recent low. That is why my stop loss is here. I have the red line right here for my SL placement, because it is only ideal to put your stop loss at invalidation point. And again, you can see this is the red line. I still give extra space, right? I still give extra space in case any manipulation were to happen. Another thing I tell people is when trading the lower time frame, it's not like you want to sit in the lower time frame and just use the lower time frame to make all your whole analysis. No, you only use the lower time frame to get precise entries. Once you are done with that, you get out of the lower time frame. Don't get stuck in the lower time frame. Get out of the lower time frame and go back to the higher time frame. So we are using the higher time frame for context, which is the 15 minutes. I'm using the 15 minutes to look at the whole overall structure. I'm only using the 1 minute to have my clear entries, right? My precise entries. Don't come and start marking demand zones or supply zones on the 1 hour time frame. I mean, some people do. If that's what you do and it's profitable for you, could do. But I'll really say you look at the 15, then you can use the 1 minute, the 3 minutes, the 5 minutes. Once you are skilled enough, right? It's not for beginners. Once you are skilled enough, you can use the lower time frame to kind of like have those nice entries, which kind of like gives you a better risk to reward ratio. So after this, now you understand the logic behind my SL placement. Now we come back to the 15 minutes. Now you see why that blue demand area which I marked is there, right? Let's refresh this like this. Great. So basically this is how it was. Now if you now look at it again on the 15 minutes, what can you see? We can see that we're breaking structure to the downward side, right? That's why we're breaking structure. Look at this. So we had this high, low, took out this, we came back up, took out this, we came back up, failed to take out this low like I explained, and then because it just whipped, there was no body candle, it did not close, and then we shifted back to the upward side. So now from bearish trend to bullish trend back, we shifted back up, right? So this is a high right here. Most likely what I'm expecting to see is for price to come down, and take out this high. If we take out this high, that confirms here we are breaking structure, but we didn't. We only wicked it right now, and we are kind of having some we are currently consolidating. But what I really want to see to confirm my trade properly is if price, really push past it, and then we have another break of structure to the upward side. That would be really great. And then price just keeps moving like this. like this, like this. Let me close this like this, right? Price doesn't move in a straight line, so we come down like this, until you need to understand key levels. That's why it's very important to understand where you're setting your take profit. You're setting your take profit at key levels. Why? Because you understand that when price gets to that key level, we're going to have some reaction, most likely, like I explained previously.